Hey guys, in this video, we will cover the current real estate market news as of March 2021. First, we will talk about the new forbearance extension that has been granted to multifamily property owners. Then we will look at the California real estate market numbers. After that, we will look at interest rates and see what is going on there. And finally, what do we expect moving forward? Hey guys, my name is Mac Rogers. I'm a real estate broker here in the East Bay. Welcome to Living in the East Bay. We cover the real estate market here in the East Bay, and from time to time, we also do general real estate market overview and how it relates to our local market. Let's begin. Let's talk forbearance. There's good news for owners of multifamily dwellings. FHFA extends mortgage forbearance for multifamily owners. This means that property owners with Fannie Mae and Freddie Mac backed multifamily mortgages can enter new or modified forbearance if they are experiencing financial hardship due to the pandemic. A lot of these multifamily properties are rentals, and guess what? We talked about this in my previous videos. This economic disruption that is caused by this virus is disproportionately affecting renters. And in the past, there was not a lot of recourse for owners of these types of properties. Now imagine for a moment not being able to collect rents and not being able to evict those non-paying tenants and replacing them with paying tenants. And then you as the homeowner or the property owner still need to make your payments and also the upkeep of the property. That was and still is a dilemma for small investors and property owners that have rentals. If you're a property owner and you take part in the relief program, you are required to inform tenants in writing about the tenant protections available during forbearance as well as during the repayment period. You also must agree not to evict tenants for not paying rent while the property is in forbearance. Check out the Fannie Mae and Freddie Mac websites for more information about this. I will put a link in the description below. The bottom line is this is good for everyone, more so for the property owners that have tenants that are not able to pay. Now, they can get relief or help if their mortgage is backed by Fannie Mae and Freddie Mac. Now, let's review the latest numbers for California and see what's going on compared to a year ago. These numbers, by the way, are for January of 2021. It takes time to get all the numbers together for the whole state. The California numbers overall looks like this. For single-family homes, prices went down compared to December of last year. But if you compare these numbers to the same month in 2020, that is up a whopping 21.7%. It's the same story with condos and townhomes. January of this year is down compared to December, but it's still up over 10% compared to January of 2020. Take a look at the rest of the numbers regionally. The Bay Area, no surprise here. Median home price is at $1,025,000. If you want to buy below $500,000, you can find it in the Central Valley, far north, and the Inland Empire. Now here in the Bay Area, 5 out of the 9 Bay Area counties, the median home price is topping $1 million. San Francisco County and San Mateo County are the top two at 1.7 and 1.6 million respectively. If you want to find cheaper housing, you can find it in Contra Costa County. Median home sales price, $765,000. And you can also find it in Solano and Sonoma and Napa counties. Median sales prices over there are all under $1 million. Here are the rest of the numbers for California. If you were looking for housing that's under $250,000 in California, you can find it in Glenn County and Tehama County. These two counties have the lowest median home price. Who says California was expensive? You've probably seen on the news how California is experiencing an exodus of people, especially metro areas like the Bay Area and LA. While it's certainly true that there are a lot of people leaving California, it is nowhere near the numbers that could turn the tide in terms of real estate. If you want proof, just try buying a house and see how much competition is out there. Like anything in the media, it's all overblown. Here's a link to an article showing that people are leaving out of state. This one is from KGO. It makes no mention of the fact that a majority of those leaving San Francisco are actually moving within the state. Here's another news item. I will put a link in the description to an article from the San Francisco Chronicle that shows USPS data showing that most San Franciscans are moving to, drumroll please, top destination, the East Bay. But of course, that headline is not sexy. It's more headline grabbing to say that people are leaving the state, right? Here's what the numbers look like, or what it says on the article. The only out-of-state destinations among the top 20 were Travis County in Texas, home of Austin, where 239 households relocated. Denver County, 238 households. In Multnomah County in Portland, 175 households. In contrast, 8,131 households relocated to Alameda County and 6,637 households went to San Mateo County. Now, I'm no math whiz, but those numbers are not big compared to the in-state numbers. In fact, the top 15 places San Franciscans are moving to are still in California. So there you go. Thank you very much, San Franciscans. Home values are escalating because of you. No, really, thank you. As a homeowner, it's great. As a home buyer, not so much. Let's move on to interest rates. If there's anything that will shift this market fast, it could be interest rates. 30-year fixed rate is now around 3%, averaging 3.02% this week. Just an FYI, this rate is still near historical lows. I mean, I remember when rates were at 6% and the older realtors and mortgage guys were telling me, back in such and such time, the rates were above 20%. That's mortgage rates, okay? Not credit cards rates. Now, I feel old. I'm telling people, I remember when the rates were at 6 and 7%, and we thought that was low. As of March 3rd, 2021, according to the Mortgage Bankers Association, mortgage applications increased 0.5% from 1 week earlier. This is for the week ending February 26, 2021. So right now, this rate increase is still not affecting the market. But be warned, if you're shopping for a house right now, check with your mortgage lender to see, 1, if you still qualify with the new higher rates. 2, has your approved purchase price changed? Meaning you could be approved for less because of the higher interest rates. And 3, what is your new monthly payment and do you like it? Look, you might still be approved for the same loan amount, but you might not be happy with the monthly payment anymore. So that changes your home search. See, this is one of those things that I don't understand when buyers tell me they will wait. Wait for higher interest rates? Wait for the market to go down? Interest rates are projected to go higher. So be mindful of this and keep an eye out on your pre-approvals. So what do we expect moving forward? As we move into a more normal economy with the vaccine being accessible to a majority of the population, the economy opening up, expect interest rates to keep climbing. One can argue that these mortgage rates have been artificially kept down by the feds so as not to totally shut down our fragile economy. So this will definitely affect a lot of home buyers in terms of affordability. Will this switch the current seller's market into a buyer's market? Here in the Bay Area, I don't believe it will turn the tide anytime soon. In fact, I'm almost tempted to say that with the current economic and market conditions, it may never go down. I know never is a strong word, but hear me out. There is so much money in this region, it's ridiculous. We are talking tech-rich people, stock-rich people. When I first started my real estate career, bumping into home buyers that were in the tech industry was a little bit kind of a unicorn. Now they're like weeds, and I mean that in the nicest sense possible. They are everywhere, flush with stock options and ready to plunk down their hard-earned cash for the American dream, which is really becoming more and more of just a dream for a lot of people. It's become the ultimate luxury around here nowadays, owning a home. I mean, how else can you describe paying for something over $150,000 asking and still not end up getting it? That is luxury. In other places around the US, that's an actual house. Here, it's the amount that you overbid and still not get it. True story, by the way. We weren't even in the top 5 of offers after bidding $150,000 over. Now, before you say, well, once the economy tanks, then the housing market will implode. In the last 6 major recessions the US has experienced, 4 of those recessions, housing was actually up. If you've watched my videos, you've seen this graph before. 1980 and 1981, housing up 6.1 and 3.5%. 1991, housing down marginally at 3%. Think about this for a second. If you were already alive and can buy a house in 1981 and said, I'll wait until the market goes down before I buy, you would have waited a whole 10 years before you bought, and it would have been at least the same or even more expensive since prices were appreciating and it only went down 3%. Now, the next major downturn was the mortgage crisis of 2008. Prices went down 19.7% and in a lot of places more than 50%. This is what a lot of you are waiting for. First of all, shame on you. That was true hardship that a lot of people were experiencing at that time. Second, housing was down big because it was the industry that brought the whole economy down. And third, here's what I know about you and me even though we have never met. If this thing happens again, you will be scared out of your pants and won't be doing anything. You know what you will be saying? Well, the economy's down, so I will wait a little bit and see if we go back, wait for it to become normal before I decide to buy a house. Case in point, when China locked down Wuhan because of the virus, and basically everyone said that it was just a matter of time when that happens over here in the US. When it did happen, I was telling everyone that I was helping buy a house, and even my old clients that were not buying, that there was going to be a 3 to 6 month window of possibility of being able to buy a house with very little competition. I told them that it won't be a bargain and it won't be crashing, but very little competition. Well, you know what happened, right? First of all, it wasn't 3 to 6 months. The window was only 3 weeks. For all of 3 weeks, there was almost no one buying. You could have picked a house, and probably if you competed, you would have competed with 1, maybe 2 other buyers. That was it. Out of all the people that I was helping, there were like 15 buyers that I had. There was only 1 couple that had the guts to still buy. Why? Because everyone was scared of how the economy was going to react. Look, I get it. It was scary. We didn't know what was going to happen with the virus and the economy. So please, stop saying you'll wait until it goes down. You can't even pull the trigger when things are rosy. What more when it's not? And finally, if I hadn't made my point clear about this whole economy going down and how it affects real estate, look at last year. Our economy almost shut down. In fact, if you're in California, Emperor Gavin, that's what a lot of people call him, he did shut down the economy, and guess what? Housing was still up over here. Nationally, it went up 9.2% and counting. Look, we can't predict the future. We can only go by market indicators and statistics and see what they have done in the past and see if it will repeat itself in the future. The reality is that home buyers don't necessarily look at all these statistics. Home buyers and home sellers usually act when they need to. And that has also been my advice whenever I'm asked, is now a good time to buy or sell a house? The right time to buy or sell is whenever you are ready, willing, and able, and it meets your needs. Not because the rates are low or the market is hot. Hey, if that is you, wherever you are, whether you're in the Bay Area or a different state, we can and we would love to help you out. Give us a call, a text, or an email, and we can partner with you on your next chapter of your life. Have a great day.